All right. Good evening, everybody. Let's do a audio video check. How's everything on your guys' end? Looks good. Sounds good. Let's wait. I'm gonna get a few things set up on my end. Looks good. Sounds good. Okay, we're good to go. So let's jump into it tonight. It might be, this is gonna be a good one tonight. As always, welcome everybody. Welcome to Slow Markets. Topstep risk disclosures in the YouTube chat. Everybody knows and understands. This class is for educational purposes only. It's not a signals class. And yeah, let's go through and get to it. How's it going? How's it going? Let's see. Go through. Going through some of these. Let's see. Make sure make sure all my notifications are turned off. Just double checking. Okay, we're good. Okay, let's get to this. As always, we'll go through our regular rapid fire, which is NASDAQ, crude oil, Nikkei, and then gold. And then we'll get to some Q&A. And I think tonight we'll probably go through some trader statistics. We'll go through some trader statistics tonight. It's been a while since I reviewed some trader statistics, so if you do not know, and if you do not know how to share them, then over here on the left-hand side, you can see there's a performance stats, and then you go over here, and then you can click on share right there. Click on share, and then copy link, and copy and paste that link to my channel in the Topstep Discord. So anyway, as you guys go through and do that, let's go through and do this rapid fire. Let's take a look at the daily. It is a short week. Everybody knows that. Tomorrow's the last trading day this week. Tomorrow's Wednesday, and it's only Tuesday, so we've only had 3 days. And you can see the last 3 days, it's been going up and to the right. And sure enough, we continue to move in this direction. It's been a channel. It's been, up and to the right slowly but surely. It's not been a crazy rally. It's just been slow and consistent. It's a nice grind. If we zoom into a hourly chart, which let's do that, take a look at the hourly chart, we can see we didn't really do anything today. As you guys can see, this was a nice area of resistance. This support became resistance. We've seen that there yesterday, and today during the New York session, we had a whole lot of nothing happen where we just barcoded all day. We went up, we went down, we kind of went sideways, and it was a rough one. I took a loss. I lost $5,000, hit my daily loss limit, which isn't bad. That's why we have daily loss limits. Well, I didn't hit my daily loss limit. I just locked myself out right around 5,100, whatever it was today. And yeah, right after that, we transitioned into a range bound strategy, and it worked out really, really well. This morning I was trying to short up here, which is kind of funny because that was a good trade. I just didn't leave enough room. Maybe I was a little bit early. It was timing, and right idea, wrong time. We sold off. We went back down to these 920s and just range bound for the rest of the day. And house account did really good. The house account was green even during power hour. I joined power hour today, and Dobie and the team had another amazing trade. Was long from like 920, so we were long. The house account was long down here, and kind of nice move. And so here we are again, and we are at the top of this range. The question now is going to be, do we hold this? Is this resistance, and are we going to continue back down towards the lower end of the 20,900s? Or are we going to have a breakout and rally? Maybe we could come up and test these 21,000, 70s. Maybe we could come and test the highs of the week, right? We had this gap open, and so the highs of the week is going to be around 21,000, 70s, maybe 80s. So either or, where we either rally up and we go and test the highs, or we sell off and go back down. This is an interesting area. We're up near the highs, so I think there can be some opportunity for some shorts to, get in short, manage risk, have some stops right above there, and then maybe look for a continuation down. Or if you're bullish, looking for that continuation up. It's kind of a decision zone. This is definitely a decision zone where I could see shorts. I could also see longs, depending on which way you believe that this market could go and how your process is. Let's zoom into a 5-minute chart, and then we'll keep going 5-minute chart. Yeah, you can already see going into tonight, it looks like we opened up. We opened up with a gap down. Interesting. So it looks like we opened up all the way down here. You know, we closed at 21,000. Actually, you know what? We closed just below 21,000, like 20,999, and then we opened up down. I'm just talking about tonight, and we've been lower. So we're lower than where we closed. Just going through that. Yeah, we are lower tonight than where we closed. It looks like we did find a little bit of support, but I would not be surprised if we do have a bit of a sell-off down towards these 20,900, the lower 900s into the London session. If not, if we can hold and find, you know, this support, then yeah, maybe we do get that nice little run, break through these highs and have continuation. But I'm not really looking for a continuation or a breakout trade tomorrow. I think there's a decent chance that we can just kind of consolidate going into tonight and into tomorrow. If we take a look at the news, we all know there's going to actually be a decent amount of news. This is, you know, tomorrow is going to be the 27th. So there's a lot of news. There's the jobless claims, there's GDP, there's durable goods, and you know, PCE, which is a big one. So there's a big list of news that's going to be coming out in the morning. Now, this is, you know, Mountain Standard. Central Standard Time is an extra hour, so just 7:30 a.m. Central Standard Time on this, and then, you know, 9 a.m. Central Standard Time on the rest of this stuff. So as you can imagine, there's a lot of news tomorrow, and so I would not be surprised if we see more consolidation. We stay inside this range, I mean, until we get that news. So that being said, let's move on to crude oil. And so hold your questions to the end, and we'll get to them. So crude oil, I'm actually pretty bearish on crude. You could see today during the New York session, we had that nice rally, and we got up to $70 a barrel, and we sold off, right? So you can see that this bearish trend is starting to continue. And it's pretty straightforward now, I believe, where we're making those higher lows or lower highs and lower lows. So lower highs and then lower lows. And, you know, here's another, you know, lower high, lower low. Now there's another lower low. And so now the next question is do we just look for opportunities to short this? Are we going to sell off back down to these $67 a barrel? I would not be surprised. That's actually not too bad of a target, to be honest, here in crude. And it looks like tonight we're selling off as well. What would we get to? 68, basically $69 a barrel almost. And this past hour we are selling off. So I wouldn't be too surprised on a continuation down in crude oil. Other than that, I don't really like the longs. If I was going to get into a long, then I would be waiting until we break through that 69 level. And that's just a pivot, and I'm looking for a pivot up. And best case scenario, I mean, 69.75. There's not a lot of room to the upside. There's more room to the downside than there is to the long. And so bearish crude oil going into tonight and to tomorrow. Next, sorry, going through really quick because I want to make sure I get to the, you know, questions. I want to make sure that I'm able to get to some trader statistics. Bearish the Nikkei. I mean, similar to crude, where we broke down, we sold off, right? We broke through this, you know, this level of support. We sold off, and now it looks like we had a bit of a pullback today. We had a bit of a pullback over the past couple days, and tonight we got up to what, 440s, 450s, and now we're selling off again. And so, very realistically, I could see this Nikkei selling off and maybe continuing to go test, you know, maybe this 38,000 and these lows down here just below 38,000, maybe 37,900, 37,800. I can see that. This would be pretty realistic. I mean, we are already sold off down and we're testing this week's lows already. And so it's going to be interesting whether we find some support here, which can very well be possible. You can see there is, you know, a few levels of support and resistance, and if we do hold, it's hard to find a trade off this. It's very hard to find any longs right here, just because we have a lot of, you know, bearish pressure and a lot of selling momentum going into this. I think the better trade that I'm going to be looking for tonight is going to be looking for continuation back down. Now that being said, if the Nikkei is bearish, And then we take a look at the NASDAQ, right? We talk about correlation sometimes. You can see how the NASDAQ's pushing up, and the NASDAQ has, bullish, and we're testing the highs. But then the Nikkei's, selling off, and we're testing these lows. So, markets do not always have to be correlated when it comes to this. And that's why I don't really like to play correlation. I mean, almost never. Almost. Not 100% of the time where I don't. Sometimes I will look at these different markets to see how things are moving and reacting. Next, let's take a look at gold. Interesting move on gold. Really interesting. And I say that because this is an hourly chart. Let me look at the daily chart first. Take a look at this, where we just made, is this an official lower high in gold and a lower low in gold, right? So are we going to see continuation down and make a lower low? And then when we do, with that in mind, if we do zoom into a 1 hour chart, we're starting to see some type of flagging pattern. And this is a really key moment, I believe, in gold, where we can either make a higher low and then maybe look for some type of, rally up to, say, 2690s. Maybe we can see a rally up to 2690s. Or if we do end up breaking and selling off, I think we can see this continuation down to 2600, maybe 2580s in this zone. I'm more bearish on gold just because obviously the current trend is down. And this is a lot of momentum too, very similar to crude oil. So I prefer the shorts on gold. And this is a flagging pattern. Maybe what I could look for is a break of this flagging pattern, where if we do start to break, then we can, find a breakout. I say we, I mean me, and this is just for education, right? I'm not saying we're taking this trade together, but this is a concept. This is an idea. And this is the way that I view the market. Very basic, very simple, and straightforward technical analysis. And so looking for shorts and looking for us to break this trend. And if we do, then that nice continuation maybe down to, earlier, like, November 14th, November 15th lows around 2590 to 2580 based off of, this. Even if we do measured moves, right? I don't do this too often. I probably should. If we probably do these measured moves, yeah, I mean, that's pretty close. That's really close. I mean, if we take even this longer move, that's going to line up pretty close to these lows. So it's not, maybe we see a breakdown in gold tonight. We'll see. We'll see. Let's take a look at Bitcoin. I know everyone's been talking about Bitcoin. I have not traded Bitcoin. I might place a few demo trades on Bitcoin because it's been a while and I'm continuing to test out Bitcoin. So and I did this analysis during Topstep TV on the day show. I want to just show you what I'm looking at. I don't know if I talked about it last night. I might have. I'm just looking for a regular pullback, which is weird because a regular pullback in Bitcoin is like 17 to 20% on some of these instances. So a decent pullback, and I don't think we're there yet here. One thing I want to point out is, from a pure technical standpoint, is this was some major resistance right around 92,000. And so are we going to find support here, or are we going to just keep selling off? I'm looking for this market to get, maybe come and test these 86,800s. But ultimately, for me to get bullish, I want to see us test this level. I want us to get that almost 17 to 20% pullback, which is going to be right there. It's going to be interesting to see because there was a lot of movement over this weekend. I don't care about gaps because Bitcoin does trade over the weekend, so gaps are not valid. But there was a lot of movement over that weekend. So I don't know what the weekend looks like. Gaps are, invalid on Bitcoin because it does trade over the weekend. But in terms of a pure technical analysis point of view, yes, a 20% pullback. So if we go through, and yes, this is consolidation, And if we get just any level of pullback, I mean, it's crazy because if we look at this, like a year and a half ago, we were down, around 30,000, and we're up here and we tested 100,000. So I do the same analysis on, any market. I do the same analysis. You guys see me do it all the time. I just did it a moment ago, where we can test these moves, and we can test, like, when we do get pullbacks, about how far do we get a pullback, right? And so sometimes I do this. I do it, this was an abnormal one. This is a pretty big one. But if we measure these pullbacks on Bitcoin, you guys could imagine about where it will kind of line up to. And if we can get a pullback to that, let's see. So instead of looking for a percentage, maybe we could look at something like this, right? And this is kind of lining up. That it's not. Now it's when a market moves fast like this. So when a market moves fast, I want to get this straight, okay? This is interesting. This is very interesting. When a market goes up, whether it's a stock, whether it's a futures, whatever it is, the higher it goes, then the bigger the percent pullbacks. So for example, if we're looking at a pullback here, this is, say, 17%. But then if we look at the price, that was a $13,000 move. $13,000. I think that's the dollar move, right? No, yeah, let's go. I think that's the dollar amount. Yeah, it's about $13,000 in a move. So this is moving about $13,000, $13,000. And so for us to get that same percentage pullback, it's going to move like 19,000. So the higher Bitcoin goes, the bigger the dollar amount pullback gets. So I'm going to be curious to see if this, I mean, maybe we could come back and test these 87,000s and then find some buying opportunities. But until then, it's just hands off because we can see a further sell-off. Looking for this level. Yep, this would be one. And the next one is going to be that percentage pullback, which is going to be a little bit earlier. And then I don't know if Bitcoin looks at Fibonacci retracements. Is Bitcoin? Yeah, look at this. We're at the first fib. That's kind of funny, actually. That is going to be a key zone. This 87,000 level, this 87,000 zone. We're finding some support right there at that, this first fib level. Then the next one's going to be around this zone. So I'm going to be curious to see how that is. Next, okay, let's move on to the Nikkei. Then we'll get to some questions. Looks like everyone's saying it's selling off. Let me look at the 5 minute. Yeah, Nikkei's just selling off. It's looking ugly. Is NASDAQ. You know what? This is just a dummy account. So let me just throw one on there. I'm going to throw a short on the NASDAQ. So, all right, let's get to some questions. Let's get to some questions now. And then if you guys want me to review your statistics, you know where to share them in my channel. Let's go through. Do I have a link for it? Let me see. If I have a link to my channel. Give me 1 second. I'll get the link. There it is. That is where you would share your statistics for me to review them. Okay, let's get that. Okay, gold futures show a gap up, but the gold dollar looks fine. Any thoughts on this? What do you mean a gap up? I'm not sure what this person means by a gap up. Can you look at silver? Not tonight, Alexander. Silver and gold are very similar. Do you like the retest on that break, or you enter right on the break? I'm not sure what you mean, Don. Sorry, I'm getting some. I went through the rapid fire, and now I'm getting back to some of these questions. It's in rollover. Can you take a look at the Dow? Can you explain the steps to get to a funded account? So, okay, so these are some interesting questions. One more. I should read these questions in my head before I read them out loud. I always struggle at range-bound markets and always get chopped up. What do you think is the best way to avoid it? Okay, so let's take a look at the NASDAQ, because I struggle sometimes with range-bound markets. Obviously, today was a range-bound market on the NASDAQ. I'm going to get into another one. So I do struggle. I want to talk about, I'm going to actually increase this. There you go. I want to look at the 1 hour chart. So we're going to look at the 1 hour, and I want to talk about range-bound markets, because I think this is good, because I want to do this in a demo, and I want to talk about a few things. I'm going to do maybe a few trader statistics. We'll review them, and then I'll answer some more questions regarding this. Remember, this is just a dummy account. It's a demo account. I put that risk disclosure. I'm not trading my live right now. It's Wednesday, everybody. It's Wednesday's trading session. I took a loss today during the New York session already. I'm not too inclined to be jumping in the markets with my live account immediately. So range-bound markets, as we've seen that today. So if we're looking at a range-bound market, which obviously with hindsight, it's easy to see today in the NASDAQ was a very range-bound market. Now, if you guys watched during fast markets, I minus 5,000. It was quick. I was minus 5,000 within the first 50 minutes. And, sure enough, $5,000 loss. And then after things started to settle down and we identified okay, this market's not wanting to go anywhere. We're looking to consolidate and we're looking to be in a range-bound market. And then guess what? We switched, we flipped, we started to trade a range-bound strategy. And a range-bound strategy, as you guys can imagine, it's buy low, sell high. Very simple, very straightforward. So I'm going to walk through the day on a 5-minute chart, and I'm going to explain it. Okay, so I'm going to explain this, and I'm going to explain it with a 5-minute chart and a 100 tick chart, because that's what I was using, and that's what I used to trade with during the New York session. So if we look at the open, so I'm going to put a line. I'm going to put a line. This is good information. This is kind of a good teaching. So right there. So that's where the start is, and let's find that area on this 100 tick chart. So there we go. Okay, now we'll just delete that. So here is the start of the New York session. Oh man, that trade is horrendous. Why do I just like my charts clean, and it's kind of blocking some of the candles. So anyway, I'm going to go through this, and I'm going to go through it throughout today and kind of what I struggled with, and then I will talk about at that moment. And you can watch the fast market sessions or the fast markets, because it's recorded today during the New York session, which was a great example of this, of the market transitioning and being able to identify and then change your strategy. So I'm going to go through everything, because today I had a short bias, and I'll show you why. I'll talk through everything. So before we get started, the way I did my analysis going into this session was I was not looking for a big breakout to the long side. I was looking at this. This was some major support yesterday. This was the day before, obviously November 25th. And I was looking for this to become resistance. So I was in the mindset that, it's a shortened week, that's going to be low volume, and we have major news coming out on Wednesday. So I did not really see any big breakout, happening. And, also I think there was the one mistake I might have had was the night before, last night. So down here, everyone knows, Trump talked about tariffs, right? And the market reacted very negative on that. And I personally believe that what the amount of tariffs was going to be viewed negative in the New York session. And then we were right at a level of resistance. And so I'm like, okay, we have a chance to sell off. Now, this wasn't like I'm going to short and I'm going for 100 points. I was only going for 30 points. It was not a big trade. So I had a little bit of a bias. So we rallied up overnight, and we went from what? 20,750. So all the way down here during slow markets, or last night, it was, 20,750, and overnight we rallied, all the way up to 20,009. We were at like 970s, right? So that's 200 points, over 200 points overnight. And so going back through this open, and as we started to open, the first candle. So if we go through the first candle, so you can see, I mean, these are hard to tell for reference. Maybe we could just put a horizontal line or a vertical line so we could do reference. So this was the open, like that's basically the open. Let's put the open right there. That's the open. So you can see over here on the right hand side, we opened up in the New York session, and immediately just straight up, right? Buyers stepped in. And so, oh man, I'm going to get rid of that. You guys get the point. So there is the open, right? Basically this zone. This zone is the open over here on the right. This 100 tick chart. And so we rallied all the way up. And if you guys remember, I got short. Yeah, I think it was, I'm going to go through this. Yeah, you know what? That was it, I think. Let me make sure I have the time, because the tick chart goes really quick. The tick chart goes really quick because this was it. I'm going through. I'm going to make sure everything looks right. Okay, so yes, this is what it was. I got short on this candle. We went up here. I rallied. It rallied. I got short. And I was looking for this market to sell off and at least come back and test where we opened. So that was my trade. My trade was to short up here near these highs. And I was looking for this market to return back to where we opened, or at least have a chance. I did close one contract out for profit. So I was in short 5 contracts. I closed one out for profit. So I closed out at like 68 or 67 or somewhere right there. And then I just held, and then I ended up getting stopped out. I don't know where. I got stopped out once, and then I did it again. I shorted that one. I got stopped out. And then we started to sell off, right? And so I got stopped out once, twice. We started to sell off, and I was like, dang, we hit a news event hit. So this news event hit over here on the 5-minute chart. You can see news event hit. We went down to the kind of where I was targeting after the news. So we got down to 20,930s. After the news, we rallied up. And I was looking for us to have a continuation down. I ended up getting short somewhere around like 950s. Sure enough, it went straight back up. I took another loss. My stop loss was right like around 70s. I took another loss. Okay, I'm done. That's it for me. And then sure enough, we waited for another 15 minutes. We rallied all the way back up. So we rallied all the way back up. Let's see if I could find. Yeah, that was it. So we rallied all the way back up to like 980s, right around this area. And then guess what? We sold off. So we sold right back off. And so once you see something like this on a 5-minute chart, or at least the way I see it, there's a lot of candles. There's a lot of wicks. We're just kind of not going anywhere. You can imagine, 3-bar reversal. Where's the 3-bar reversal? Well, there's a 3-bar reversal here. There's another one like after this news candle. We had a 3-bar reversal up like down here, then up here. And we're just kind of chopping. You can see it's almost like a barcode. We was hanging out around 20,960s. Once we identified that, when we finally identified that and saying, okay, this market's not wanting to, break out to the long side, we're also not breaking down to, any lower. So we're staying in this range. And so what the plan was, and going forward, it's, okay, well, if the market's going to stay around 20,960s, well, let's buy when we get up, and have any type of rally, and let's sell for 10 points, look for 10 points profit, and then we're going to buy back at these lows, and then we're going to sell. And that's all it was, looking for these little bounces and these little sell-offs to fade, right? So if we're looking at this, I kind of show you what I was looking at on this 100 tick chart. So once we identified that, any little move or any like overextended move, like these average moves, right? So if we get moves like this, then we fade them. If we have sell-offs, we buy it. And so that's kind of what the thought process was. You could, now again, my memory's not the best, so I would always recommend just re-watching that. And sure enough, that's kind of what it was. Every time we sell off, we bought it. Every time we rallied up, we sold it. Every time we sold, and that's all it was. It was just ever since that news event and ever since the start of the open, it was just buy down here near the lows, sell up near the highs. And yeah, it was straightforward. It was simple after that. Obviously, with hindsight and after you take some losses, I was happy the house account was able to take a lot of those. That was me the day Ukraine launched the U.S. missile. Yeah, so I think that was it. And it's hard to identify. It really is, because, you know, if you're playing for a breakout trade in either direction, I mean, it's tough. It really was. I mean, we tried. I had the right idea that it was going to continue back down. I just didn't give myself enough room. But did that make any sense to you, everybody? Did that help anybody? Did it make sense? I don't know. And so this particular one, just for example, is the same thing. It's, hey, we're going to sell, and you know, maybe we look for this continuation back down to 20,930s, maybe 930s. Maybe I could close out one contract if we do test these 70s, and then leave one overnight. This is an overnight one. Stop over leveraging? No, it's not. It's not over leveraging, because it still followed my process, obviously with hindsight, because the thing is, on the New York session, I was short, like, I don't know, where was I? Somewhere in here. And I'm not going to let this market get all the way up to, you know, 40 points against me. And I was fine taking 3 trades. 3 trades a day is about where I take it. Whether there are 3 losses or 3 wins, 3 trades is my setup. A 15-second scalp was best for today. Oh, 3% isn't over leveraging. Well, it's lately I've been trading with 1.5% in terms of my daily risk. It is about 1.5%. Is my daily risk for my $380,000 account. $5,000 a day. NKD bug candle, big candle. Now we are bouncing. We are bouncing off that level. Let's see. Is this going to become support? So far, this is support, right? If you're looking to buy, and if you're looking for this to be range bound, sure. This is a good example, right? Where if you are a trend trader, you're going to look for this market to break down and maybe continue to this next level. If you are a range bound trader, then, you know, obviously you want to buy at a level of support, and we've held this not once, but twice. And yeah, maybe this market does end up, you know, continuing right back up to where we started. All right. Oh, come on. Okay, questions, and then we will get to some statistics. What if you take 1 loss and 1 win, both canceling each other out? Do you continue trading? It depends, 9T. So the question is, if I take 1 loss and then I take 1 winner and I'm scratched for the day, do I continue trading? If it's in the New York session and I do see, you know, a decent market and there's a trade setup, yes, I will take it. And I will continue to take trades until I either hit my daily loss limit, or the market is no longer in the right condition, or the market's harder for me to read. And today it was, I didn't want to lose any more. And so I locked myself up. Okay, this is enough. If I was profitable and I was watching this market, I don't think I would have traded. I mean, this is a consolidating day. This was a mess of a day. And so even if I made, say, $3,000 or $5,000 today, I would have not traded this mess. Like, I would have seen this wick and I would have seen these candlesticks. And I said, okay, you know what? This market's just going sideways. I'm going to be done. Lock up $1,500, lock up at that $3,000, whatever it is. Or even if it's a scratch day. If it's a scratch day, and I would be happy just being scratched, say I'll wait for the market to be in a better condition for me to be trading. I'm very happy with 1 to 3 trades a day. 3-bar reversal on the Nikkei. Yeah, let's get to some more of these questions, and then we'll keep looking at these markets. I'm going to go ahead and get this set up to okay, we can watch these different markets. 3-bar reversal on the Nikkei. Yeah, I mean, on the 5-minute chart, sure, you could say this is a beautiful 3-bar reversal. Yeah, that's technically a 3-bar reversal on the Nikkei. Yeah, because we are pushing up. If anything, I would actually be tempted to short the Nikkei. I would be tempted to short the Nikkei. Never mentioned the 3-bar reversal. How much would you recommend for a daily loss limit for a 50K combine account? 27 color. It depends. It really depends, right? What would I recommend for a daily loss limit on a 50K combine account? It's hard for me to say because it depends so much on the way that you trade. I personally wouldn't risk more than $100 per trade, $50 per trade, until you feel confident. But whatever it is, just follow your process. I will always be saying process over profits. Always process over profits. It's hard for me to say. I know Topstep does have a daily loss limit. However, I would always recommend setting your own. Set your own daily loss limit. Whatever you think your daily loss limit should be, cut it in half. Like if you think your daily loss limit should be $500, then cut that in half, do 250 and trade off that. That I recommend that. I'll say whatever you think your daily loss limit is, half of that. Get consistent, and then once you start to show consistency, then you could widen your daily loss limit and feel confident doing so. I hope that makes sense. And there's a lot of traders, and here, maybe instead of asking me, I think maybe even a better would be, in their Discord. We have a lot of traders here. We now have over 100,000 traders in the Discord, where there's a lot of traders trading a 50K combine, and they have a lot more experience than I do when it comes to understanding what their daily loss limit is and what the daily loss limit is for that 50K account. Good luck. All right, let's get to a few more questions. How do you choose where to trail your stops, and when do you add to a runner? So if you watch Power Hour today with me and Dobie, and that was a beautiful example of where to trail a stop, or at least where I trail my stop. So that's another one. It depends, right? Because if I'm long, let's just say I'm long here at 20,983, and then this is my stop loss. I'm going to make this one red. Then I like to trail it below the pivots. So like pivot, 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 pivot. Right now I'm short on this demo account. I have my stop loss up here. And so if this gives me an opportunity, we could demonstrate it. We can demonstrate it, that's for sure. Going through some, and go. All right. Question for everybody. Are you guys positive this week or negative? Andrew, we had $183,000 payouts. Did I miss that? Did they put it out on TopstepTV? Negative, positive. A good mixed. Positive. Just reading through. A lot more positive. Oh, Andrew. I thought you meant we had one today. So I was thinking that. Yeah, I had a big payout. Yeah, I have. I might still hold the record for the biggest payout. I took out a total of 186,000 this spring, early summer, late spring, in June, I think. I do. Positive hit daily loss limit. So a lot of, it looks like it's about 50-50. It's about 50-50. So let's understand this, everybody. It's a short week. It is Wednesday. Technically, it's, you can trade it like it's Friday. It's Wednesday's trading session right now. And so, you can see I'm trading a demo account. I'm not willing to put a trade on in the live, especially tonight. It's a night right before a holiday. I'll probably look at some trades during the New York session when we get some more volume, some more volatility. But until then, it's just pure. Just let's work. Let's answer some questions. Let's maybe talk about the markets. Let's maybe review some trader statistics. Yeah, so you guys could keep an eye on this one. I mean, yeah, this one is, if you guys want to watch a demo account, sure, go ahead. It's going to be a slow night. So that being said, let's get to some more questions and let's take a look at some trader statistics. Tonight's going fast. Preferably, if you are going to submit your statistics, the more details, the better. Let's see. Let's go through this. Let's continue to answer questions and yeah, let's get to it. Let's go through. Okay, here's some statistics. Here we go. I like this. This is an XFA. Express funded account. So this, everybody knows it has a lot more pressure because you can receive a payout on an XFA after 5 winning days. So I like this one. It's nice. It's a nice equity curve. It's not just straight up, right? So I want to talk about this type of an equity curve. This is good. This is really, really good. The last thing what's harder to see is equity curves that just go straight up, or equity curves that are just really, really like hard to read, hard to understand. It doesn't have a lot of data. This level, like at this point, is where you can actually start analyzing your trading statistics, because you can't judge your statistics off of one day. You can't judge your trading statistics off of 1 week. You really need a lot of data, at least a month's worth of data, to accurately judge your trading statistics. It really is. And so this is right about there to have true statistics where 1 day it's not going to affect it much, or at least it shouldn't, right? Unless you're just going to go in and blow an account, then obviously it's going to change your statistics. But this is consistency. I like it. I like to see it. You're right around a 1-to-1 risk reward, just over a 50% winning trade percentage. And this is the most important one, profit factor. You're profitable. Just scrolling through here, I love that you're about 50% on, shorts, shorts and longs, really close to 50%. It looks like least profitable day is Sundays. I'm going to scroll through this and I'm going to be quick because I want to try and get to a lot of trader statistics. I want to make sure I'm answering questions. So as I go through this, just ask whatever question you guys have in the chat and I'll try and get to them. Remember, the chat does go fast, so sometimes I'm not able to get to all of them. This looks like more on the scalper side. The majority of this trader's trades are less than less than 5 minutes, 5 minutes or less. Okay, I like this. This is what a real trader goes through. Okay, this is real trading, where social media has really brainwashed a lot of traders. This is not my statistics. These are not my statistics. This is a submitted statistics. Social media has really brainwashed traders to believe that having all green days is what you should strive for. Yeah, you want to take a trade that you believe is going to be profitable. This is realistic. This is what you should be expecting. You're going to have a mix of green days and red days. You don't have to trade every day. So I like that this trader's, not trading every single day. I like that a trade, like you're journaling. You're journaling on your winning days, your losing days. You're able to stop trading when you're down $1. So that's good. The fact that's discipline. You stop trading, you're only down $1. It was a scratch day for you. That's amazing. And you're not letting your losses get so big you're wiping out a week's worth of profit. It's mixed. This is a trader where, heck, I would fund this trader myself because I know this trader knows how to take a loss. This proves you can take a losing day and move on and continue, right? Where you take a loss, bounce back, take a loss, bounce back. So I like to see it, and it continues. So this is a true trader statistic where look at the quality, 4 trades, 2, 3, 2, 8, and the number of trades, they're not a lot of trades on this dashboard. So the dollar amount, I'm going to say this, all you have to do is size up. Now, this is not a recommendation. I'm just giving this for an example. People look at this and they say, "Oh, this is not impressive because you only made $1,600 this month." And they look at this month, "Wow, this is not impressive because you only made $387 this month." That's not the point. The point is consistency. Can you consistently place good trades and have a positive expectancy? Because essentially, all you have to do when you feel confident is size up. So you just increase your size. This trader looks like he's just trading one contract to trade. One contract. That's all it takes. One contract. And then once you feel consistent, then say you trade 2 contracts, or this is theoretical, 10 contracts. You put a 0 at the end of this, right? Same process, same exact process. You just add a 0. That's it. That's purely an example, but same process, you add a 0. Now, how many traders would be able to trade exactly the same if they just added a 0, right? Can somebody withstand an $8,000 losing day? Probably not. They're going to be more emotional. Can a trader, how are they going to handle a $6,000 winning day, right? Are they going to be very emotional about it, right? And so, sure, $800 looks nice. If you add a 0, is that going to change the way you trade? Like, ask yourself that. It's process over profits. The answer needs to be no. The same way you trade like this, and the same way you made $387 will be the exact same way you make $3,870. It's the same process, same way you enter, same way you get out. And that's the same thing, everything. That's what traders need to understand, is trading is so scalable to a point where, just if you add a 0, how would you trade? That's an interesting way. I'm always scared to make money. Yeah, you're going to have a lot more fear, right? If you have a winning day and you're like, "Wow, I just made $2,000 today." And then, "Dang, I lost $4,000." And like, how emotional would you be if there was a 0 at the end of your day? And odds are you're going to trade differently. And you might think you won't, but you're going to be scared. You're going to be scared to lose money. You're going to be scared to give back some of your profits, and you're going to handle it a lot different. So great job, great work. I love to see it. It's not just all green. It's not unrealistic. This is how your trading typically should be. It's realistic, and if you trade the same, exactly how you have been, I could have a very high level of confidence that this trader will be around in another year, because they know how to take a loss. It's more about taking losses than anything else. Okay, I'm going to just keep going through this. Here's the next level, and then we'll take a break and answer some questions. Since October 29th. Okay, perfect. Let's go through. I want to make sure I'm getting all the statistics. Okay, here's kind of, this is a great trader, right? But this is kind of on the opposite side in terms of winning trade percentage versus your risk reward. This is kind of what scares me sometimes. Is I need to see if these are payouts or if these are just losing days. So most important thing is you're making money, you have a nice profit factor, you have an upside down risk reward, but because of that, you have a higher trade win percentage. So I'm curious if these are losing days or if these are payouts. Hopefully these are payouts, but sometimes what I see is I see nice long equity curves, and then you lose one day, and that one day wipes out a week of profits. And then if you have 2 bad days in a row, your account's blown. No negative when it comes to, we talked about this during Topstep TV on, I don't know what the thing is, and it's purely just my comments and only my opinion, right? And this is an extreme example where we have the win streaks. Everybody in here, they know their win streaks, right? They talk about it on Topstep TV during fast markets, where you, like, for example, Delesh. Great trading, great consistent trades, right? Where you have winner, 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 winner. 90 days in a row, all green, right? 90 days, all green. one bad day wiped out what, 90 of those days, 80 of those days. So I don't know the exact story. It's just purely saying this, for example, is it does not matter how many green days in a row. It does not matter what your trade win percentage is. It matters, just like the last trader was looking, how do you handle your losers? That is one of the most important things. And you can't have a one without the other. You can't have a winning trade percentage without this. This is good. This is really good. You have a positive expectancy. So let's take a look. I'm going to go through this really quick. Nice. Looks like you do have a mix of some losing trades, but yeah, you're taking payouts. So each one of these are payouts. Each one of these dips in the equity curve, you took a payout. You took a payout. You took a payout, and then another payout. So this is really good. I like this. I like to see it. You are not trading a lot. This trader is, 4 trades. Quality over quantity. So now the question you need to ask yourself is, what does your losing day look like? It looks like you had a $400 loser, $360 loser. Or you were started off down 360 and then you made it back up. So I'm curious. This maybe not too bad. I'm just looking for like drawdown, right? Like what was the most you've been negative on this, but not too bad. A lot of times when I pull this up, a trader might be down like $2,000, and then they just keep trading and get it back up to plus 200. I think the most was 800. Yeah, 800, 890. So that's still not bad. It wasn't all in one trade. It looks like, I lied. That was one trade. 800 in one trade. That's still not too bad. As long as you are not letting one losing day just destroy a week, right? If you're able to do this consistently and not let one bad day just kill your entire week, I think that was that was it on this. Let's see. Just going through some of these losses. Keeping it consistent. Nice. Minus a $400, minus 400. So it looks like you do have that limit. So keep up the good work. It's always scary. Whenever I see statistics like this. It's like, oh man, how is that bad day going to be? If it's like minus $900, that's not bad. I would take that, right? You're made $8,000 this month. That's a beautiful thing. Now, same question is, what if there's a zero at the end? Can you handle that? Would you be able to make $80,000 this month if there was a zero at the end? Would you be able to handle, 2,000, 3,000, 2,000, 3,000? Like they would be great days. And I'll be curious to see, would your trading process change if you just add a zero? That's a tough one, right? Like that's some great money. And these are some beautiful stats. Let's keep going. I'm going to go through and get on some of these. I would like to analyze. Okay, I'm going to take a look at this one because this is a different one. This is a obviously express funded account. I want to touch base on this. This is on the opposite side, right? Lower win percentage, but a higher risk reward. Lower win percentage, higher risk reward, still positive. So two different traders, right? One with a higher win percentage, one with a lower win, and they're still both profitable. Here's a good example, good equity curve. Scrolling through here, I'm going to be pretty quick on this. Letting your winners run. I like that. It looks like when you do hold trades for an hour and above, they're typically winners. You're cutting your losses short. Your losses they're coming on the short side. So this is what you want to see when you analyze your statistics, where guess what? You are cutting your losses when they are going against you. And then when they are going in your favor, you're holding them 1, 2, 3, 4 hours. And this is a nice bell curve. I like this bell curve. It's a mix. It's a good mix. Let's go through that. Same thing. You're not letting your bad days get too crazy and out of hand. So good trading overall. Oh, look, NASDAQ going straight up. Let's see. Let's take a look at the Nikkei. Nikkei not really moving. The Nikkei is not moving. Let's take a look. NASDAQ's breaking out. All right, so now here's the question. How are we going to react if we get to this level? So it looks like it's 21,024. 21,024. Let's watch and let's see this. We're going to keep this open. I want to watch to see this. Long the Nikkei. Hey, Coach, any tips on the Nikkei? Don't trade it. If you are new to trading, I do not recommend the Nikkei. I talk about it. It's the Japanese market, and it does move at night. If you are going to trade it, practice it in a demo account, maybe one contract. The Nikkei is tough to trade. Here's the NASDAQ. We're watching the NASDAQ right now, and it's moving. There's a lot of volatility. I'm going to go through, and let's get to some questions, and then maybe we'll finish it off with a few more trader statistics. Will you still consider not trading for the first 30 minutes of the US Open? Sam, that is actually the question that's been on my mind. That is what I was thinking today. The question is, will I consider not trading the first 30 minutes of the New York session open? That's kind of like that's the question I asked myself today. I don't know. I think if I have a few more losing days, I will consider that, because here's the thing. Friday, I made 11,000. Monday, I made 5,000, 5,700 or something. And then today, during the New York session, I lost 5,000, right? And I was trading the New York session. I haven't seen a direct correlation. I have not seen a direct correlation between the New York Open and my losses. So I don't know. I thought about that today. I was like, wow, I lost and I'm already done trading, because I need to lock myself out. I don't want to trade anymore. But then Friday and Monday, it was the same thing. I was actually up that same amount and not more before the New York session. I mean, Friday was different because I had an overnight trade on the Nikkei, but or Thursday. Yeah, Thursday night is when I had that overnight trade. But Friday, it wasn't too bad. But yes, that's been something that's been on my mind. We will see. I think after the break, after Thanksgiving and the holiday, I'm going to continue to trade, and that's something I'm going to kind of watch a little bit more on. I'm going to watch it more. My minimum contract size, I need to keep it consistent though. So that's one thing on my mistake. So I am one mistake that I have been doing over this past month is there's a couple trades. I placed the trades that were too small in size. So if you believe that, that's what it was. It was last week. I think it was last week or Monday where I had two really good trades, and those trades were only single contracts. And I need to be more consistent with my sizing in the mornings when I'm on TopstepTV, where if you guys remember, maybe you guys follow along. I don't remember exactly where it was, but yeah, maybe it was. I think it was either Friday or it was Monday. I can't remember, but my minimum contract size per trade needs to be 5 minis, and I need to be consistent. 5 minis in the NASDAQ, because what happened was I placed a trade and it was 1 mini, and I made 30 points off of it. And I did write it down in my journal. I mean, I have an Excel sheet. I write it down. I don't have a physical journal. I just have an Excel sheet. But yeah, I was so upset with myself. And I was like, wow, my two best trades were single contract minis. And if I would have just stuck to my normal sizing, instead of making, say, $600, that easily becomes, $3,000 per trade. And there was 2 trades. No, it wasn't fair. I think I was like, okay, you know what? I'm kind of done for the day. So instead of risking money, this is still a valid trade setup. I'm gonna enter this trade. And so I enter the trade, and it just goes so well in my favor. And yeah, I think it was a consolidation day, and if I would have let it run, they were both 100-point bangers. Yeah, it was last week. It was last week Monday. Monday, we had a 100-point trade. The Wednesday, I had a 100-point trade, and it was Friday morning. Yeah, Friday morning was I had a 100-point trade Friday morning. Let me look. Yeah, so there's Sunday gap. Yeah, it was this right here. I remember this. It was this trade. So this was Friday. Guess what? Friday, range bound, right? Friday was range bound. I bet if we go to an hourly chart, you could see it. Like, yeah, Friday was range bound. Look at this range. It was range bound. So yeah, if we go back, let me see. This is what it was. This is kind of how I do my analysis sometimes. So what my trade was, yeah, this is it. This was so frustrating, everybody. Now, I'm not complaining because I did make money, but it was Friday. I was up 11,000. And yeah, Walter, that's kind of part of what it was, is capital preservation Friday. And this was the trade. What I was seeing was, it was right here. We rallied up. We had almost a 3-bar reversal. We got that 3-bar reversal, and that was the trade. And yeah, sure enough, I only took one contract there, and it ran for, you could see that, over 100 points. So I had an opportunity to, make almost 100 points on that trade. However, I just took one contract. I closed it for I think I even made 40 points on this one, but that needs to be 5 contracts instead of 1. That needs to be my minimum size. So I made that mistake Friday after I was done, and it was just like, dang, I really need to focus, and that's something that I struggle with. And the funny thing is, right after that, so right after this trade, guess what? I took another single contract long, and I think that one worked out too. Let me see. If you guys don't mind, let me ask the chat. Do you guys mind if we review that? Do you guys mind if we review it? If I pull up the YouTube, and I want to do that. Let's see. Okay, yeah, let's do it, because I think it's nice because my trading's recorded on YouTube. So essentially, all my trading's recorded. And that means I get the luxury of watching my trades. It's nice. It's a benefit of being on air. It's a double-edged sword because sometimes I'm distracted, but other times I have that luxury of watching my own recordings and then watching how my body language is. Yeah, we're going to review this. We have 25 minutes, and I'll walk you through. Let's see, 6 days ago. I want to make sure I'm pulling up the right recording. What is today's Wednesday, right? Slow markets, going through this. Let me see. Give me a second. I'm trying to pull it up. It wasn't 6. Okay, I think I found it. Let me make sure. Yeah, well, I'm talking about, it's Wednesday's trading session. Yeah, I go off the trading session, so technically this is Wednesday. That's how I go off. I know it's Tuesday here in the US, but I go it off. I base everything off the trading session, if that makes sense to you. Yeah, this is it. Okay, I'm gonna pull this up. I'm gonna turn this on. Give me a second. I'm gonna turn on the music or the sound, and we're gonna go through this together, if you don't mind. This is how I do my studying. Maybe this helps anybody. And you can see the chat here. Chat's distracting. Chat's always distracting. Sometimes the trolls. So this is how sometimes I study. Is I have that luxury of watching the recording, and let's go through.
We start to zoom in. You can see this downtrend line that I had.
You guys could hear that, right? Let me know if it's too loud.
This is what I was talking about earlier, where these are lower highs, right? So higher lows.
Let's see. Is this
so this
too?
is a nice
Did you see that I was up
trend.
11,000?
Broke out of it, and this is something
I want to make sure this is.
Ah, man,
it.
you know, looking for us to retest. Well, we just
Yeah.
got that retest.
Now I don't mind going through this really quick.
And my entry was
Sounds
right
good.
at these 808s, 809s. So,
yeah, and you can see how I react sometimes. Sometimes I will watch, like, okay, how's my reaction? How's this? How's that? And I'll go through. Let's skip through some of this. I want to see. So there's the New York session. And I could kind of walk through my head. I mean, it was kind of similar to today, right? It was very similar today, where we had that rally at the beginning. So you can see that rally at the beginning, because the New York session just opened, and we rallied to start the New York session. And let's skip through some of this. I don't want to take up too much time going through it too much.
Taken out, you're on medication.
And yeah, look, same thing, right? I we had that nice rally, and this is what I was looking for today. That's what I was looking for today, and we sold off. Like, that was a beautiful one. But I want to skip back to that trade where I made a mistake.
Type of trade right now, as opposed to that power hour trade we took.
Yeah, so here's one. This one was a loss. I was looking for this. I like this, actually. Just 1.5 it. No, I don't want to sit here for the entire time. We don't have a lot of time. We only have 20 minutes left. So I'll walk you through what I was thinking, right? I was looking for this. This is my 3-bar reversal. As you guys can imagine, I was looking for this market to actually break through that resistance. Let's skip through that. You guys don't need to see. See, I don't know why it stayed there. That's weird.
What's our session high in the NASDAQ today? 873.
Let's go through that one. So you see,
ready to see your brand on TV. Your competitors wish they had known about Vibe.
We're getting in trouble for doing ads. Okay, going through this. Then I got into this long again. This was my mistake. Mistake number 1. 2 contracts when my entry needs to be 5. So this was one mistake. Even though this was a good trade, even though this was profitable, needs to be 5 contracts. This was definitely one of those trades where I messed up. It was a mistake.
Yeah, single prints up to 75.
So yeah, let's
775.
Right.
I see 75 as well. 75.
Okay, I'm long 3 now.
So we'll see how this one. This one worked out really well. So as you can imagine, there's a difference. So when you're walking through and understanding what your statistics are, what's your risk reward, what's your win percentage, it's very important that I need to be staying at that correct contract size. Or it depends sometimes. But yeah, this is one. This was one mistake. I should have stuck it with 5 contract size. It was based off my stop loss, Hassan. Yes. Yeah, it was based off my stop loss. But I should have been adding, right? I should be adding. But instead, I was taking some off, right? So yeah, I finally got the move I wanted. Mistake number 1 on that, because I was still looking for that break of this. Sure enough, this was one mistake. Obviously, see what happened after that. The market just went straight up. And that was kind of a little bit frustrating on my end, where I was watching that and I was like, wow, I should have just added, right? Because it was originally based off my stop loss. And as I tightened up my stop loss, I should have added to get to where my original 5 contracts, or I should have just, got in a little bit sooner. But sure enough, that trade just straight up. That was a mistake, even though it was a winner. And now, if we go back to the next trade, let me see if this was it. I need to make sure. Yeah, here it is. Here it is. Same exact thing, where we consolidated, and I made the mistake again. I just went into 1 contract when I should have jumped into 5. And it was the same thing. Today, we had this consolidation. Friday, I was able to identify the consolidation a lot sooner So you consolidate, and plus the market was a little bit more clean. The market was more clean. You see how clean this price action was? Well, we rallied, we sold off, then we rallied, consolidated. So there's better price action on Friday than there was today. Today it was just really choppy, and you'll see the difference. So you'll see me enter one contract. And that was the mistake. Yeah, see, one contract. I was only risking 625. So I didn't want to give up some of my profits, but it's process over profits. It was definitely a mistake on my end, not following my process. And I was thinking about just capital preservation. And once again, I closed that one early. Yeah, look at this. Yeah, I closed it early. And after I closed it, you guys could imagine what it did after. And if I was in 5 contracts, I would have had that opportunity to close off some. Yeah, look, see, it sold off. So even though it was a profitable session, I think this was an example of me breaking my process, where my process typically is 5 contracts, close a few off for profit, leave a runner. That would have played out beautifully, where you see how it's a nice consolidation day, enter into 5 contracts on the break, and then I'm able to close off 1 or 2 contracts where I did, and then leaving 1 for a runner. So even though they're profitable and they were good trades, it was a mistake, and those were mistakes. And then if we compare that to today's session, right? Today's session was a consolidation day, but look how ugly it was, right? Where we got that rally at the beginning during the New York session, and then we got that nice sell-off. But after that, like, there was never as clean of an opportunity. We didn't have the consolidation or a good 3-bar reversal. Same up here. It was very choppy. It wasn't as wide of moves, and it was very rough. It was very rough on my end. So I think that was good. I don't know. How was that? How was that? Reviewing a YouTube of myself and talking through it, and kind of talking through my thought process again, and how it affected, trading today. Because I was looking for something similar, and unfortunately I took the loss before I was able to identify that we're consolidating. We learned something too cool. Is it Tuesday, your least profitable day now instead of Friday? I mean, technically, sure, you could say Tuesday is. Exquisite. Yeah, it's interesting, because I would say try recording yourself trading, and then after your trading day, I don't know, try it. Review your own recording trading, and then kind of judge yourself. And then you could be like, wow, why did I do that? Why did I do this? It's interesting. It definitely has helped me. It's gave me a weird perspective, a perspective of trading that it's a new perspective, I guess. I loved how you walked through. Yeah, it's like live journaling, right? I have that luxury to be on a live YouTube, but you can do it too. I know there's some traders that will record themselves trading. Maybe not them as their face, and they're not going to be talking. They record their screen, and while they're recording their screen, they trade, and then after, they have their journal entries, and that's how they journal. And then maybe they do like a vocal journal, right? Like, I traded here. This is what my thought process was. And maybe you're just talking to yourself, but you're recording it, right? And you're recording a journal, and maybe you're walking your through, and then you're trading, and then you could go back and listen to it. And I can tell you what, I will say, and I know this for a fact now, is when you have to explain a trade in front of thousands, that makes you a better trader. Like, I've had to explain every one of my trades I take while I'm live to thousands of traders. And, that has helped me. It really has. I don't imagine anybody in here explaining their trade every single day in front of thousands of traders who hold them responsible, because you guys hold me responsible to my trades, and I can't really hide anything. And I'm like, yeah, I'm just going to do this. I'm going to hide that. You guys see everything. And that's part of showing the executions in front of you guys. It's showing everything. And then even on Twitter or X, right? Where, let's see. On Twitter and X, you guys, if you follow me, I do it. I enjoy this, where despite a loss today, it was still a good day in the market, minus 5,192 or 1.4%. And so being able to, and I don't want to say I'm forced to do this, but like doing this has helped me. Like this is also a level of journaling where I can post something like this. I could come in, I could, have conversations with the community and say, oh, have these conversations, and then be able to analyze my trading day. These things all have also helped me. And, I'm always a big fan of the Discord, where have a trading buddy. A trading buddy could help hold you responsible in your own trading, where you might not see that you're breaking your process. You might not see you like having maybe revenge trading, but maybe somebody else does, or maybe you'll be able to recognize that the next day after you've started to calm down, and then you could review your recording and say, wow, I was revenge trading. Why did I take that trade? I broke my process. And 9 times out of 10, you don't realize you broke your process until after you kind of calm down and get out of those emotional state that forced you to take a trade that you shouldn't have. So yeah, anyway, that being said, I think that was really good. I was happy I was able to go over that, even though it did take up a lot of this afternoon. We do have 13 minutes left. Let's get to a few more questions. So yeah, any questions regarding that I can answer before we finish it up here tonight? I'm going to take a look. Let's take a run at these markets. Nikkei, not doing anything. We just kind of sideways. That is literally a barcode. We are really just barcoding tonight. Just straight barcode. Scan that one. Let's take a look at these other ones. Let's take a look at gold while your guys' questions come in. Gold's going up, straight up. Yeah, still not. I mean, look, we're holding that, right? So the question is, are we going to break through this one? Are we going to break out and go to the long? Maybe we could see us return to these 2688s from the long side here in gold. Gold's moving a little bit. Let's take a look at crude oil. Crude oil not doing anything. It's not doing anything. Let me move to, we see the NASDAQ over on the right. Let's take a look at Bitcoin. Bitcoin not doing anything. Slow. It's slow tonight. That being said, let's get to some of these. How do you read the market so clean without any indicators? Just raw candle it. We just, yeah. I get used to just clean price action. Every single night, you guys see how I read the markets. I read the markets the same every night. It's the same thing over and over and over again. There's a little bit of discretion when it comes to support and resistance, a little bit of technical analysis, but it's something I got used to. And whenever I add indicators, like if I have a VWAP or just something, it bugs me. Like this bugs me because I feel like I'm not, like, it's just in the way. I just see these and they're like, these are in the way. Let's get them out of here. And then like, okay, that's much better. Nice, clean, naked charts. I fear not the man who has practiced 1,000 kicks once, but I fear the man who's practiced one kick 1,000 times. Yes, Hassan. Yep, Bruce Lee. That is the exact same thing, right? Practicing the same thing, the same process over and over and over and over and over again, rather than practicing, 1,000 processes 1 or 2 times. It's distraction. It messes with the bias. I have nothing against indicators. It's just, indicators can be useful. They really can. For new traders, I recommend something as simple as a moving average or a VWAP. And, that helps give you a bias if you don't know how to trade, or if you're new and you're just trying to become consistent. And then keeping something simple, right? Like, hey, whenever this indicator is above that indicator, then I'm only going to look for longs. And now if it looks like this, and we're trending up based off of this, then I'm only going to look for longs. And that's valid. That's valid. Sometimes it works really well. Others during this consolidation, it's hard, you could see. And look, now with hindsight, right, you can say, oh, wow, every single time it touches the VWAP, it's been good buying opportunities. And so indicators are not a bad thing. I just personally tend not to like them because it's not the way my process is, but it's good, right? Look, moving average is above the VWAP, and buy every time we touch it, and it's a decent one. It doesn't work 100% of the time. Nothing works 100% of the time. It's just for me and my own personal process, less is more, and I like to keep things simple. Do you think if we are up on our account, we should keep trading or just lower the risk? Same for when we are in drawdown. That was my mindset Friday, right? That YouTube recording of me trading on Friday, that was my mindset. That is why I lowered my risk. That is why I traded a smaller contract, was because I was up 11,000 and I didn't want to risk my profits. That's valid. Okay, that's very valid to do. Is I'm up money, I don't want to give back any money, so I'm going to reduce my size. That is very, very valid. I only said it for me because that's not my personal process. It was Friday. I was up 11,000. I didn't want to give back any money. And I was just like, okay, smaller size. And all those trades on the smaller size were amazing. And now it's the woulda, coulda, shoulda hindsight. Whereas if I would have followed my process and just stuck to my normal sizing, that would have been a 20K day. That's an easy 20K day following my process. And it's spilt milk. Learn from it. I mean, you learn just as much from your losses as you do, on sometimes your winners. And I think that was it, where you make a mistake on a winner, you can learn from it. Not every winner is a good trade. Do the charts work on Trading View so Topstep charts are clean? There's chart by trade view. In your opinion, what is the best account size to trade the NQ or ES? Whenever I recommend an account size, I recommend the smallest account size. I recommend a 50K account, and I recommend trading 1 micro until you develop your own process. Because if you can do it with 1 micro, and if you can do it on a 50K account with 1 micro to find consistent trades and have a positive equity curve, then you can scale up. I don't want to see traders just buy combines. I don't want to see traders just put money trying to copy trade 5 contracts and make all this money, because that's not really what it's about. It's about becoming consistent. And then once you find a good process, then you can do that, right? Now, that's where sometimes I hate social media for that reason, right? You see everyone buying all these combines, copy trading all these accounts, and they do good, right? You've seen, I copy traded accounts over the summer, over the last 3 months, and I made a lot of money. I made over 300,000. This year, I'm over 500,000. And yes, a big portion of that came from doing just that, copy trading accounts and trading multiple combines to get to those XFAs. However, I had a process, and a lot of traders that you see posting all those profits should have a process. If not, they're gambling. But the goal is that's not you. You need to focus on yourself. And if you are new and if you're trying to be consistent, then 50K account, very small, 1 micro, gain a decent process, learn how to trade, learn how to be consistent. And once you see consistency and you have that confidence, you're like, okay, you know what? I'm okay. I'm going to go ahead and trade a 150K account. And then you do good. And say you pass and you receive your payout. And then the next step, you're like, okay, you know what? I feel like I could do this on 5. And then you could do it, right? And so that to me would be the right way. Now, my opinion can be very different than someone else's opinion. Someone else could say, hey, if you have the money, then and you're okay with going straight to 150K account and buying 5 of them and just going for it. And you know, if you win, you make a lot. If you lose, you know, you're just out whatever you have invested. Like, you know what? Do you do you. If you feel like that's your way, that's good. And if it works out for you, I mean, that's great, right? It's just not the way I would recommend to, like, my family members. If my family member would come to me and they ask me they want to learn how to trade, and I would tell them that. I'd say, trading is harder than what you think it is. You're probably going to lose money your first year, and you need to be doing this on 1 micro. And like, oh, I see you trading 5 minis and I see you making all this money. I'm like, yeah, you know what? I've been trading for, you know, over 14 years, and, you know, you don't go to college for nothing. You go to college, you spend, you know, 4 years of college, depending on what you're getting. And then after college, then you have to find a job. And then guess what? Then you could do brain surgery if you're going to be a doctor or a neurosurgeon. Then you could do brain surgery. You just don't, you know, get out of high school and say, I'm going to go operate on somebody and try and save someone's life, you know, your first day in college. No, you would not. You would not try and do brain surgery your first day in college. You have to go through and put in that work. Maybe you get lucky and you save someone. You save someone's life by sheer luck, right? But we're not going to talk about that. Yeah, I've made my mistakes. I've lost my student loans trading money. Do as I say, not as I did, or not as I do. 27. I'm 31. I'm going through this. If they can pass the 100K easily, they should have no trouble passing the 50K. The 50K isn't worth it to me due to the drawdown limits if you trade minis. Yeah, Adam, that's perfectly fine. If that's the way you view it and that's your process, then that's good, right? That's why I recommend micros, not minis. Micros. If I said minis, I was wrong if I recommended that. 150K is best. Yeah, see, everyone has their own opinion in the way they approach the market. I simply say a 50K trading 1 micro so that you could get used to it. Doing that, I'm not saying you're going to be passing in a day. You're not going to be passing in 2 days. You know, it's going to take you a few months, 3 months, 4 months, maybe. Maybe you... Yeah, like there's so many routes. And to be honest, and while I was viewing some trader statistics, well, you guys see me view the trader statistics. Like, let's take a look at this one. I randomly pulled this one. So, yeah, here's an example, right? This is good, consistent trading. This trader's been in this XFA. This is an XFA for over a month, right? Like, look, from almost a month. If you showed me this, if this was a combine, like if this is your combine, not express, let's say this is a combine, someone's going to be like, oh my gosh, I don't want to trade a demo account. I don't want to trade a combine for a month. I want to pass in 2 days so I can start making money. Those traders typically end up blowing at their XFA. A trader like this, if a trader passes their combine with this level of, you know, consistency, I swear, like they're going to have more success in their XFA than someone who passes in 2 days, someone who passes in a week, someone who passes a combine using this level of consistency, trading small. And yeah, it's going to be longer. It's going to be a lot more boring, and you're going to like have to practice that patience, and you're not going to be paid for this until you get to an XFA. This trader's an XFA. He's done the hard work, and he or she, and they're trading consistency, and now they're, you know, able to take a payout. And these are some great statistics. It's a little scary though sometimes when I see all these winning days in a row for that reason. I'm going to pick at random. So here's a little clue if you want to analyze your own statistics. I can visually see where a trader struggled, right? 2 trades, 9, 1 trade, 2 trade, 3 trade, 9, 2 trades, 2 and 1 trades. 29. So without clicking on this, I'm guessing this trader went through a drawdown on this day. Yeah, this was an emotional day for this trader. You were down, 565, and then you brought it back. So that was an emotional day. Without seeing, I'm pretty sure this one was too. Yeah. So this is a good example of what I was referring to. So good trading. Don't get me wrong. This is good trading, but you were down $3,000 at one point. In no way should you risk and let your account get $3,000 in the negative when your profitable week is $1,800. So before, when I analyze and when I see a lot of green, that is kind of what scares me. Now you're still made money. There's like you can't argue with profit. However, just as easily, this could have been, a $3,000 or $4,000 losing day, or if you're not using a daily loss limit, blow your account up. And so you're basically risking your entire month's worth of profit. Like, even last month, right? 1, 2, 3, 4, 5, like a whole month's worth of hard work. Like, this is hard work, time, work, hard work, dedication. So it's like, was that 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 trading days worth of hard work, stress, time in the market, sitting behind. You're risking all of that for one day, right? One day. And so I don't know everything that happened this day, but and it was on a Friday too. But just understand, be a good loser. Be a good loser. Repeat that self. Like, it's much easier to recover from a smaller loss, maybe a $500 loss, a $1,000 loss, have a daily loss limit. Only lose what you can make on average. Typically is a good rule of thumb. Maybe 2 or 3. So sometimes that's scary. And great job. I'm not going to argue with profits. And this looks good. It's just, how is your losing day going to be? What is that losing day going to be? Is that losing day going to wipe the account? Is it going to wipe the week? You're going to have a losing day no matter what. Like, you are. And just when that losing day comes, what's it going to look like? But good job overall. I'm always tougher on traders with positive stats because, like, you need to understand, even though you're doing really well, where can I improve? And that is where you can improve. Because when I look at a trader's statistics like this, the number one question I ask, okay, how would if this trader is going to blow their account, how would this trader blow your account? Well, this trader, let's think, how would this trader blow their account? Well, like you could see over trading, right? And it looks like, this would be the way that this particular trader could possibly blow this account. I do the same thing for me. Whenever I review my statistics, it's the same thing. I said, okay, here was my trading day. Here's my trading month. How would I have lost money this month? Like, what did I do? Where was my mistakes? And, X, Y, Z, I did this, I did that. So always understand, regardless of how profitable you are and regardless of how good of a trader you are, there's always ways to improve, and there's always things that you need to be watching and looking out for. So great trading, great statistics. Love to see it. Love to see that, positive, almost a 2-to-1 risk reward. Just be very cautious. Be very cautious. Please, I would hate to see somebody that puts in all this work and trades this well end up giving back an entire month's worth of profit because of, one stubborn day. So I'm going to leave it there. I went a little bit over, but appreciate, that trader. I'm sure you don't mind. The trader said, I was on tilt. That we all go through that. I go through this sometimes. That was tilt. So I'm going to leave it at that. It was good. I'm going to be on, tomorrow's Wednesday. I'm going to be on Power Hour tomorrow, and it's going to be my last slow markets of the week, and then we have Thanksgiving. So I'll be on for Power Hour, and then tomorrow during slow markets. Until then, I'll see you then.